Distinguished participants, ladies and gentlemen, good afternoon, and to some of you, good morning and good evening. My name is Ekapol Jongwilawan, Economist Public Finance at ADB Southeast Asia Department. I would like to warmly welcome all of you to the Southeast Asia Development Symposium afternoon sessions on the role of taxation in crisis response and recovery. Today, we have a very highly experienced tax officials and experts to share the insight on the very relevant topics on the tax policy and administration reform in response to the COVID-19. And today I will be the moderator of these sessions. I would like to kick off this session with a very quick brief introduction of the session. Like any other countries in the world, Southeast Asia has been hard hit by the COVID-19. And as all of you see from last year, the governments in the region has been very responsive in responding to the adverse impact of COVID-19 by bringing out a lot of stimulus measures and also the tax relief to ensure enough liquidity to sustain the communities, the businesses, and SME. As a result, the slowdown in the economy, together with the tax exemptions and also the tax relief measures, there have been a shortfall in the government revenues. And therefore, we are in a very critical juncture, especially in Southeast Asia, where the government is in a very important crossroad, how to sustain the viability of the economy at the same time to ensure the fiscal sustainability. And tax policy and measures have been the cornerstone of that policy lever. Today, we have 4 distinguished speakers, Mr. Andrew Albash, the Senior Tax Advisor from OECD Jakarta. And the second speaker will be Ibu Oka Kusumawardani, Director of State Revenue Policy, Fiscal Policy Office, Ministry of Finance from Indonesia. And the third speaker will be Dr. Esther Koisin, Director of Department of International Taxation, Inland Revenue Board of Malaysia. And the last speaker will be Mr. Vinit Vissesuvanapoom, Deputy Director General of Thailand Revenue Department. Without further ado, I would like to invite the first speaker, Mr. Andrew Albash, to give the overview presentation of the role of taxation in response to the crisis in the region. The floor is yours, Andrew.
Thank you very much, Ekapol. Thanks to the ADB Institute for the opportunity today, and also to my colleagues on the panel. Very excited about being able to speak to you about tax and the crisis. I know that the overall agenda for the symposium has covered a lot of topics, and I think the role that tax can play can be a pivotal one. Just maybe to set the scene in terms of where we are economically, and Ekapol alluded to it in terms of the hit that the economies have taken and the impact on tax revenue. We've just released our OECD economic outlook, interim outlook, about a week ago, and it's good news in a lot of respects. So I think that's very positive. There's been a real rebound at the end of 2020. GDP growth, we're now projecting to be about 5.6% this year, which is more than 1% higher than we had been predicting in December. And we're looking to reach pre-pandemic levels by mid-21. Of course, there are a lot of moving parts there. A lot will depend on how the vaccines roll out. The development of variants is obviously quite concerning. And I think the one recommendation we can certainly underscore is not to bring back fiscal policy or tighten fiscal policy too soon as we get into recovery mode. Just to look at it graphically there, you see where we were at back in November 19, looking at where we thought the economy would be by the end of 22. And of course, now we're quite a bit a ways from that, looking to get back to our initial level only in mid-21. And so that's a year and a half of growth gone. And then, of course, you see the good news at the end. We're up in our prediction, $3 trillion of output from our predictions at the end of 2020. But that's still $3 trillion less than we had predicted before the pandemic. So there's a lot of fiscal space to make up. One of the factors in a lot of economies, I think it's something to look at, in particular in the Asia Pacific region. We do a revenue stats publication in conjunction with the ADB, and so we cover a number of economies on how they fare revenue wise. Of course, our numbers are not from last year, but looking just at 2018, what we see is that the tax to GDP ratio in very many of the Asian Pacific economies is a lot lower, certainly than the OECD average. Some of them down at 15% and below. You see at the far left of the chart, the OECD average at 34.3, whereas many of the economies, looking at Thailand, Philippines, Malaysia, much lower, and so it's just that much less space to work with. And of course, numbers in 20 and 21 are likely to be down from there. In addition, you look at where we are in terms of the impact on corporate tax. Of course, corporate tax revenues, corporate profits way down. A lot of the economies in Asia Pacific are relying quite a lot more heavily on corporate tax. I don't have the numbers here, but it's also true for VAT as well. And so big hits on those. And so the fiscal space is just that much more, that much tighter, less space to work with. And so what do governments do? I mean, on the tax side, one of the roles that the OECD has had is to really provide governments around the world, not only our members, but the 139 members of our inclusive framework on base erosion and profits shifting, the 162 members of the Global Forum on Transparency, with information. Starting early in the pandemic, we began to collect data on what governments were doing about tax-wise, excuse me, about the in response to the crisis. And so we have a database. It's online. You can find it on our website easily, and it tracks the responses in over 100 economies. That's been the basis of our reporting to the G20 last April. We'll update that report this April when they meet, when the finance ministers meet, and provide a new report on the basis of that information later in the year on where we are, a state of play in terms of the fiscal response, what we've learned from the last 18 or almost 24 months at that point. In addition to tax policy, there's also tax administration. It plays a key role in what governments can do. Not only because there are very specific measures, and I'll describe them in a little bit, but that the tax administration can do to alleviate pressure on businesses and households, but also the tax administration is often the way that the government is able to deliver other benefits to taxpayers. And so not only the types of measures that it can take to put cash in pockets, but it's also about keeping the lights on and making sure those services are still available. Certainly early in the pandemic, when there was a lot of social distancing was new, not a lot of administrations not sure how to handle that, how to keep the lights on, keep services to taxpayers. And finally, there are a lot of just tax law issues that come up and the administrations need to handle. And we've provided recommendations on how to treat certain extraordinary circumstances that arise in the specific context of the pandemic. Just to give you a kind of a bird's eye view of how we see the tax policy response, We see, three broad periods of time: an emergency situation where liquidity is absolutely vital, recovery, trying to build back, and then the long-term sustainability. I guess it's easy to come up with nice labels. It's not necessarily easy to decide whether we're in emergency or recovery right now. I'm sure we're not quite at the long-term plan right now, but certainly things, as I mentioned at the beginning, are looking more positive, and we hope that continues. Looking at what governments have done to support business, households, sort of in the long term. For businesses, there have been a lot of non-tax measures trying to support workers, support labor, lending, providing guarantees. A lot of tax administration measures taking the pressure off of businesses, so extending deadlines, deferring tax, trying to get refunds back more quickly so that we help liquidity there. Tax policy measures not necessarily as big an issue in the short term. Of course, where businesses aren't profitable, providing more deductions or lower rates is not necessarily going to put cash in their pockets. For households, similarly, a lot of cash transfers, sort of direct support. Again, with tax administration, that's been something that has been very, very useful for governments, deferring liabilities, extending deadlines. Again, taking pressure off of the household in order to give it a little bit of breathing space while we move into recovery. And then I think long term, governments are moving more into how to get the economy back going again as people come out of lockdowns, looking at specific industries. Tourism, hospitality are industries that have been hit very, very hard, and obviously getting them back kind of on track is very important. Providing tax loss carryback is something that can put cash in businesses' pockets. Reducing the standard tax rate has not been a big deal. Some countries have done it. More, it's been targeted rates where that relates to specific industries. I want to underscore, the advice that decisions to withdraw support should be very carefully considered. We don't want it to be counterproductive, to be a drag on really keeping the recovery going. And then also recovery should merge with long-term considerations. I think that's where a lot of countries are now looking. Crisis as opportunity, I think, is a good mantra, and certainly there are a lot of significant issues that all governments need to address, attached to the climate goals, sustainable development goals. We hear a lot of people talking about green recovery, about inequality, about addressing some of these fundamental issues as we look to come out of the crisis. Just a final note, it's hard to quantify the scale of the fiscal report. What do you really need to throw into this? I mean, I think a lot of governments are very, they abide by the rule, like you can't spend too much on this. The risk is spending too little, and I think that still abides for a lot of governments. I want to just say a word about automatic exchange of information, tax transparency. Certainly, where you see the size of the stimulus packages, the hit on tax revenue collections that we're going to see, the tolerance for tax evasion, for not paying your fair share of tax, is at an all-time low. I think we've said that before, but I think we really mean it this time. The idea that individuals or businesses are not going to contribute as much as they should to this the recovery effort when so many ordinary individuals are really the hardest hit is absolutely unconscionable. Since in the global financial crisis, 2008, 2009, one of the things that came out of that was a real commitment to improving tax transparency, ending bank secrecy, improving access to information, international cooperation, beneficial ownership. All of these things came out of that crisis, and today we're in a position where we now have automatic exchange of bank information among over 100 jurisdictions, which is really a transformative feat in terms of international cooperation. Leading up to automatic exchange, governments have collected almost more than $107 billion. And AUI, the actual exchange of this information, last fall led to information on 84 million financial accounts with a total value of 10 trillion euros. And I think it's worth it to stop and think about that number for a second. 10 trillion euros is, I don't think at this point it's, I think they've spent more money on the recovery so far for COVID, but it's close. And that means that this information is available to governments to ensure that everybody pays their fair share, particularly high net worth individuals. It's certainly low-hanging fruit when you're thinking about trying to increase your revenue collection. Making sure that everybody pays their fair share is absolutely, I think, a no-brainer. And so that's a very positive thing that came out of the last crisis, and I hope to be sitting here 10 years from now, being able to talk about the great things that came out of this crisis. One last point, and I know I'm short on time, and we want to hear from the other speakers, but the OECD, the Global Forum on Transparency, spend a lot of effort on capacity building, and I think it's more important than ever, building tax capacity in these circumstances, making sure that governments have the tools to collect the revenue that they need, really can't be stressed enough. Domestic resource mobilization in order to achieve the Sustainable Development Goals is absolutely vital, because ODA is not going to get us there. Governments need to be able to collect the revenue from their own economies, and that's where the capacity building, I think, really pays dividends. We have bilateral programs, multilateral. We have multilateral training centers in China and Korea. Unfortunately, we haven't been able to use them in the last a year and a half, but we look forward to getting back to live training in the future. Big focus on extractives. Of course, mineral resources can be a real source of tax drain, of not collecting what you should out of major multinational companies. We have a lot of projects going on, including a major one in Mongolia. Very big cooperation. I want to underscore the efforts that the Asian Development Bank does in this area, and particularly around the regional hub that the President Masa Sakawa mentioned or announced last fall, as the ADB is a regional hub for international tax cooperation and domestic resource mobilization. And the OECD is very strong supporter of that, and we're very grateful for that initiative. Others in the region we work with, Qatar and APEC. In fact, I was just on an APEC meeting earlier this morning, and so I had the messages from those economies about what they're doing to address the crisis. TIWB, Tax Inspectors Without Borders, is a really innovative capacity building program that puts real auditors into developing country tax administrations and helps them solve real cases. It has to date helped developing countries raise over $700 million in cash that they've collected. We have programs in the region, and it's really a tremendous program. So you have the information there. I just want to leave you with that. My contact information. If anybody has any questions in the future, I'm certainly available. But with that, I will turn it back to Akapol and to the other panelists. Thank you very much.
Yep.
And
thank
sorry
you.
if I'm over time a little bit.
Thank you, Andrew, for excellent presentation. You have set a very comprehensive scene on the wide array of the tax policy and administration issue. As the participants here from Andrew, you can see that when it comes to the space of tax policy in the context of COVID-19, this is a very wide space, and there is a need to customize the tax policy option. And the COVID-19 is the global scale crisis, and this will necessitate the international tax cooperation. The country in the region have a very good opportunity to leverage on the existing international tax cooperation platform as outlined by Andrew. To really come together and brainstorm how to move forward with many international tax agenda, especially those related to the digitalized economy. The next speaker will be Ibu Oka, the Director of State Revenue Policy from BKF, Ministry of Finance, Indonesia. We have a good opportunity to have Ibu Oka to share the perspective from Indonesia, especially the fact that Indonesia will share the presidency for the G20 in 2022. We would like to hear from Ibu Oka what are the tax agenda that are lining up, especially what to be discussed at the Indonesia presidency next year at the G20. Without further ado, Ibu Oka, we look forward to your presentation. Thank you.
Okay, thank you, Paul. And also thank you, Andrew, for the opening and giving us the background views on these issues. I would like to go on that questions from Paul, maybe later after I provide, I give the my views on how the Indonesia responding to this COVID-19 pandemic with the number of the tax policies to support the health sector, businesses, individuals, including the challenges and opportunities in managing the crisis responses. And also maybe some part of the role of taxation in supporting the domestic resource mobilizations. We do know that the COVID-19 outbreak has generated unprecedented pressures on the health and socioeconomic conditions for countries worldwide, including Indonesia. In responding to that, the government of Indonesia have taken comprehensive and coordinated policy response to mitigate the impact of the crisis and to steer the economic recovery. To enhance the policy efficacy, the government enacted Law Number 2 of 2020 as the legal basis for undertaking the extraordinary responses in a swift, transparent, and accountable manner during the COVID-19 pandemics. And this law provides for the temporary relaxations of the budget deficit, sailing up to, the sailing is widened beyond 3% of GDP until 2022. But then, of course, the government needs to better manage in the future. And the Central Bank of Indonesia is also permitted to purchase government bonds in the primary market for the government, in accordance, of course, with the prudential principles cited in the Act. And the law also includes financial system stability policies, which is aiming at the enhancing the role of the Financial Service Authority and also deposit insurance corporations. In addition to that, the Law Number 2 of 2020, it also provides rooms for the government to accelerate the national economic recovery by providing the necessary taxation supports for the health sectors, businesses, and individuals' economic recovery. And in relevance with this, the tax incentive in the context of national economic recovery are provided with the aim of increasing demand, securing cash flow for businesses, and ensuring the availability of medical equipment to deal with the COVID-19 pandemic, and including for the vaccinations programs. Indonesia is now starting to implement the first phase of the vaccinations program with priority on the elderly, doctors, workers in the health sectors and also other public services. And the tax supports are provided in the form of gradual reductions of income tax rate for businesses, temporary reductions of the income tax installments, accelerations of the VAT refund process, temporary exemptions of income tax for MSME, and some relaxations of the tax file reporting timeline. In addition to that, simplifications of regulations is also on the top reform agenda to enhance the business climate and also to create jobs. The government have enacted the Omnibus Bill on job creations on November 2020, which also include the tax-related matters. This entails a massive process of synchronizations of existing laws, including the revisions of 80 laws and also thousands of articles, and it will streamline business permits, improve easing of doing business, and also create opportunities as well as protect employees. Also include incentive for the business, such as lower income taxes for some taxpayers, broader input VAT eligibility, and some investment tax incentives. Well, the enactment of those two bills with implementations of some economic partnerships agreements in place is also expected to benefit the Indonesian economy, business, and individuals. But despite the pain it brought, we know that the impetus of a crisis can also provide political opportunity. In this case, Indonesia, the government of Indonesia during the pandemic, we face the same like other country, the worsening of the economy and the reduced potential for state revenue collections capacity. And on the other hand, to restore the economy, there is a need for spending increases. And therefore, government needs to be able to allocate its resources effectively and efficiently so that it can finance various needs for national health and economic recovery while maintaining the sustainability of the state budget. And the government, therefore, obtains political support to carry out the necessary actions to help recovering the national economy. From the spending side, this is done, among others, by widening the fiscal deficit temporarily, while at the same time, we perform reforms in the forms of budget refocusing and reallocation so that the state budget can be used in a more effective and efficient ways. In addition to that, of course, investment climate was improved. We try to do the fiscal reform also, including in the form of taxations to support the inclusivity and improve income equality. So the issuance of law number 2 and the Omnibus Bill on job creations are real forms of political supports in restoring the economy from this pandemic crisis. When we talk about the managing crisis, in the medium term, we say that we understand that it is not without challenges. So back in the year 2020, the Indonesian government has implemented an expansionary fiscal policy as a counter-cyclical policy to cushion the impact of COVID-19 crisis and support economic recovery. As a result, the expenditures were significantly increased to cover the public goods as well as non-public goods, and the budget deficit was widened to around 6% of GDP by the end of 2020, compared to the budget deficit around 2% in the year 2019. We do understand that in coping with the COVID-19 pandemic, the fiscal policy needs to maintain a balance between the counter-cyclical policies to strengthen the economic recovery and prudent and sustainable budget management. And that's why in the year 2021, the government will continue to adopt the counter-cyclical fiscal policy, followed by a gradual reductions of the budget deficit to ensure the fiscal sustainability, aiming to gradually bring the budget deficit back below 3% of GDP in the year 2023. And this is also supported by further revenue mobilizations and also enhanced spending efficiency. We know that it is crucial to acquire increasing tax revenue from the tax reforms. But yes, the COVID-19 pandemic has disrupted the country's tax policy plans, including Indonesia, not to mention the other challenges we face, such as the economic structure changes and the volatility of the global commodity prices, the development of the digital economy, which also address their concerns also in the taxation matters, and also the need to improve the tax base and also tax compliance. But this doesn't prevent the government from continuing to carry out reforms in any possible aspect, including the taxations. Well, in the context of the Indonesian presidency in the year 2022, what kind of issues that will be addressed in the Indonesian presidency in 2022? Well, having since the importance of the topics, among others, the discussions on the digital economy, taxations, we think that it might be still relevant to be discussed, because going forward, we are also still looking forward to the attainment of the global consensus and the implementations, which requires sometimes to be implemented. And then the discussions on the BEPS inclusive BEPS action plan, the implementations and also the transparency is also part of the issues that, of course, interesting to be addressed, and hopefully it can also be addressed in during the presidency in 2022. Tax certainty, tax and development, tax policy on the environment is also among the top agenda that could also be part of the discussions in the Indonesian presidency 2022. So as a poll, I think that will be the end of my sharing today. I will return back the floor to you. Thank you.
Thank you so much, Ibu Oka, to share the Indonesia experience and also the upcoming agenda at the Indonesia G20 chairmanship. I think this will set a very good tone for the Q&A session later after the speech by the speaker. Let me move on to the next presenter from Malaysia, Dr. Esther Koisin, Director of Department of International Taxation, Inland Revenue Board, Malaysia. Dr. Koisin will also share the Malaysia journey to recover from the impact of COVID-19. Malaysia is one of the countries in Southeast Asia that is in the forefront of the digital transformation for the tax administration. And we hear from Dr. Esther how the country deal with the crisis and plan to step up on the revenue mobilization without compromising the economic recovery. Without further ado, Dr. Esther, the floor is yours.
Thank you, Akapol. Good afternoon to all my colleagues, panelists, and probably good morning, good evening to some participants. Yes, we have seen how the COVID-19 has affected the life and livelihood of so many people, and we in Malaysia has also been affected, not spared by this pandemic. As Andrew has highlighted just now, tax revenue has been adversely affected by the crisis, and tax policy makers and administrations are struggling to balance the need to collect revenue with the objective of supporting taxpayers and helping businesses stay afloat, making use of international tax cooperations to increase tax collections and address tax evasions. So for Malaysia, I would like to share our experience as well. How do we leverage on international cooperations to maximize our revenue tax collections during this pandemic? The COVID-19 pandemic started last year, getting more serious in March for us. And the government has responded to it by imposing several series of lockdown. As the lockdown cost the government a lot of money, it's about 2.4 billion estimated a day to the economy. That is as close as 600 million USD per day we have to look into ways how to tackle the problems, and the government has to slowly reopen the economy, although the pandemic effect is still pervasive. To mitigate the impact of the pandemic, we have the government of Malaysia rolling out several stimulus packages. These packages cost the government about 305 billion Malaysian ringgit, which is equivalent to 20.7% of the Malaysian GDP. And as Andrew has also shown us, that the corporate income tax is a significant part of the tax revenue in Asia Pacific, and that is very true for Malaysia. The main source of revenue for Malaysia comes from direct taxes, and this account to about slightly more than 50% of the government revenue, where 26.1% of this come from corporate income tax, and 15.8% from personal income tax. This is based on last year's statistic. And this has been quite similar from the previous years. In Malaysia, direct taxes are administered by the Inland Revenue Board of Malaysia, while the indirect taxes are administered by the Royal Malaysian Customs Department. So during this pandemic, actually, we have been working very closely with the government to complement the effort of the government in supporting taxpayers and businesses stay afloat during this hard time. I think in most jurisdictions, taxation really plays an important role in responding to the recovery of the COVID-19 effect. For Malaysia, there is, of course, the need to strike a balance between supporting the taxpayers affected by the pandemic and to collect the revenue from taxes to support the government recovery plan. So in this regard, the Inland Revenue Board of Malaysia has taken many steps to ease the burden of the taxpayers by giving extension of time for filing tax returns, expediting refunds, and even dispersing financial aids to the eligible recipient of the government financial aids. At the same time, the Inland Revenue Board of Malaysia has also taken steps to ensure that incidents of tax evasion actually do not increase, and that we address the risks of this happening. I think all of us can agree that international cooperation in tax matters is so important in supporting tax administration efforts in addressing tax evasion and in maximizing revenue collection. For Malaysia, we have been leveraging on international tax cooperation in increasing our capacity in collecting taxes. In the same vein, we also provide similar cooperation to other tax jurisdictions. Malaysia is a signatory to the Convention on Mutual Administrative Assistance in Tax Matters, commonly known as MAC, since August 2016. This had effectively widened Malaysia's treaty network for the purpose of exchange of information. Malaysia is also a signatory to the Multilateral Competent Authority Agreement for exchange of information on financial accounts since 2016, which enable Malaysia to exchange financial accounts information to almost 100 jurisdictions since 2018. Why am I actually sharing this? Because these are all cooperation that helps us in increasing our efforts in addressing tax evasion, and also ensuring that we collect the taxes that would have not been able to be detected if not for this cooperation. Through the automatic exchange of information, we have received around 5 million financial account information of our taxpayers are kept abroad, and in return, Malaysia has also cooperated by providing almost 3 million financial accounts information of our exchange partners, taxpayers kept in Malaysia. So we are very happy with this cooperation. We are making use of this information to ensure that our taxpayers abide by our tax laws. The automatic exchange of information has provided significant voluntary compliance effect on our taxpayers. On the onset of the first exchange, Malaysia has provided an opportunity for taxpayers to make voluntary declaration under our special voluntary disclosure program, that is what we call the SVDP, on income that were not declared or incorrectly declared before. Through this program, Malaysia has collected around 8 billion Malaysian ringgit of taxes, although it may not be so big, but this could have remained uncollected if not for this international cooperation under the automatic exchange of information. Furthermore, with the exchange of information on request cooperation, we could also make a request for information that is foreseeable relevant to complete our audit or investigation of taxpayers from our exchange partners. These include follow-up exchange of information and requests as a result of audit initiated from the CRS information received. The cooperation under the automatic exchange of information also extend to exchange of information of country by country report, which provides a disclosure of high-level information regarding entities within the MNE. This international cooperation helps us in our risk assessment on MNEs. Malaysia is also a member of the Inclusive Framework since 2017. So we also exchange tax rulings spontaneously. All this information provides better transparency of our taxpayers' business position. The importance of tax cooperation cannot be overemphasized. As we know, many new ways of doing business have created new ways of undermining the tax laws. Tax administrations could no longer rely on its own domestic tax enforcement strategies without international cooperation. Malaysia is cognizant to this need and has fully embraced the mutually beneficial cooperation available, such as what Andrew again has briefly mentioned about the TIWB, or the Tax Inspectors Without Borders program. And I would add to that the Joint Audit Initiative available under the MAC. For us, we have recently accepted the support of the TIWB in increasing our capacity to perform risk analysis on the many CRS information that we have received. We have also started some discussion with a few jurisdictions on joint audit initiatives. So we believe we are on track to help the government to recover as much as possible the taxes that should be paid, to help the government in the recovery of the economy, as well as to support the development of business environment after the pandemic. We believe that the pandemic has definitely disrupted not only the way we live, but the way businesses operates. And this has created some uncertainties on how taxation will be impacted in the next few years. The challenges ahead can only be made manageable when international cooperation become even more stronger. So we hope that this pandemic will soon be over. And we also hope that the pandemic will not be taken as an excuse to evade taxes, especially by taxpayers that may have gained economic advantage from this. And I will just like to respond to a couple's earlier mention about Malaysia's initiative under the digital transformation. It is indeed an initiative that our tax administration is taking up very seriously. We are transforming our tax administration into the digital administration. Many of our services and the way we do things in Inland Revenue Board has been digitalized. We are also looking into the possibility of introducing e-invoicing, and we hope by all this initiative, we could capture all the information that will be necessary and useful for us to ensure that all taxpayers comply with the tax laws. So I will end here, and I will be happy to take up more questions later on, a couple. Thank you, and over to you.
Thank you so much, Dr. Esther, for a very insightful speech on Malaysia's experience in the tax policy journey toward the economic recovery from COVID-19. I would like to, we are quite pretty much on time. I would like to move on to the last speaker, Mr. Vinit Vissesuvanapoom, Deputy Director General of Thailand Revenue Department. He will share the experience for Thailand, like any other countries in Southeast Asia, right? Thailand also faced the immediate challenge in terms of how to revive the revenue collection in the short to medium term, and at the same time leverage on the tax policy as the policy instrument to address the country longer term development issues such as the aging population, the changing the economic structure from the manufacturing base into more advanced economies, more knowledge-based economy. So we have a very good opportunity to have Mr. Vinit with us today. Mr. Vinit, the floor is yours. Thank you.
Thank you very much, Kunekapon. Yeah, of course, it's my honor to be here with all of you and also all the panelists. And thank you, Andrew, for giving the outline and the issues of the problem. Of course, in Thai Revenue Department face the same issues similar to Indonesia and Malaysia and many other countries. I think COVID affects us very much. And we try to looking at three stakeholders here. First is government itself and also the Revenue Department, which share 70% of the revenue. How could we manage the revenue shortfall or revenue loss? That's for the first stakeholder. And the second and third stakeholder is business and household. Of course, COVID affect all the business and make them struggle in their business, and also household as well. We're talking about job vacancy, we're talking about reduce of their income. With these three stakeholders, I would like to present in three parts. The first part is about tax relief that we use during the COVID and right now. And then we try to looking at the opportunity. Of course, we believe that all the crises create opportunities. We try to explore the opportunity during the COVID. What have we done during that time? And for the medium term and long term, what could COVID become our opportunity in tax administration? Okay, I would like to go for the first one, the tax relief. During the COVID, we faced the COVID the early of last year, around March, and we try to do with 4 steps or 4 keywords that we will explain our tax relief measure. First one is postponements. Postponement is very important because we believe that cash flow is the most important instrument that can help both government and business, also household. What we did is we postponed the payment of the personal income tax and corporate income tax, also VAT, value added tax as well. But not only expand or prolong the payment, we try to seize opportunity by ask them with one condition, that if you want to postpone your payment, you have to go online with us. As you may know that we try to implement our online system or the tax digital transformation. Our taxpayer can do all the things online, from registration, filing, payment online, and we encourage them, of course, for their cash flow and to reduce the personal contacts or the touch that we can expand the social social distancing. Postponement is very good instrument that we use. After the postponement, we use the acceleration. Of course, again, cash flow is more, very important during the COVID time. Acceleration, we try to speed up all the tax refund to make sure that they can receive their refund back as soon as possible. And luckily, we have the data analytics system, and we have the data base, which is very big, that we try to collect since many years ago, and we try to do the digital transformation. Data analytics is become our crucial instrument to help us successfully, at least partially successfully, accelerate of our tax refund for personal income taxpayer and corporate income taxpayer. And reduction is very challenging because we have to balance about the revenue of the government and the cash flow and the capacity to pay of the taxpayer. We decided to reduce our withholding tax from 3% to 1.5% for a certain period of time. And of course, we try to engage them to use the electronic withholding tax system with us. And the last one that we use is the motivation, or what we call is the word that we use instead of a tax incentive. The tax incentive that we use is very hard because most of people know that they don't have enough income, they don't need to pay tax. But we try to looking at the opportunity to create or stimulate economic that we use. For example, we use the tax deduction of 3 wages expense. We give them the investment allowance or cost recovery things that, okay, you still hire your employee. We give you extra 2 times that you can put in your expense of the corporate income tax, for example. And also we prepare for the debt restructuring, that we want to make sure that if they need to do the debt restructuring, they're going to tax deduction of that. And also in terms of the medical and health support, we try to waive tax and on VAT and CIT for the medical supply that we import and specific medical supply that we need to use for the countries. And also as a person, we expand the expense of the personal income tax that normally they can spend like 15,000 baht for their health insurance, and we expand, give them to 25,000 instead, to make sure that if they have money and they want to buy more health insurance, they can do that. And of course, they help to reduce cost of the government in the health welfare of the as a whole as well. And of course, the medical people work very hard these days during the COVID, and the government gives them a special compensation. We give an exemption for them to make sure that the extra work and extra money that they have, this is the in special situation that we give them an exemption. That's the 3 things. That's the 4 things that we use for tax relief during the COVID: postponement, acceleration, reduction, and motivation. Of course, we would like to focus on the cash flow of the both taxpayer and government as well. The second part is about during the COVID. What we try to do, of course, we try to look at the COVID in the way that they give us opportunity. Everyone knows that COVID accelerated digital transformation in all business and all sector. For the Revenue Department of Thailand as well, we make sure that it helps speed up our digital transformation. We have been using the digital system for many years. For example, for e-filing, we have been using e-filing system for almost 20 years right now. And in 2018, we tried to turn digitized system to digitalize, and we call it the digital transformation. It's a big turning point because the digital transformation this time, we try to focus on taxpayer-centric. Normally in the old days, we may use what we need as a government and as a government agency, what we need and what we convenient, and we give them the system. But right now we tried what they want to use. And this is the heart of the digital transformation that we use. Of course, as I mentioned, all the measures that we used during the COVID to relieve them, we try to tie in all the online system or the online service that we have to them to make sure that they engage with us with the digital transformation. And also this is the best way to reduce the personal contact of course they help the COVID situation for sure. And the scheme, we try to gather all the scheme that we have from registration, tax filing, and for the payment and also the refund. We call the scheme, we call it tax from home. It means they can do everything. Our taxpayer, both personal income taxpayer and corporate income taxpayer, can do all the service that we provide online from home. That's what we try to do. And of course, luckily we have the system in place already, and we try to we just adjust a little bit more. And of course, we got more people engaged with us, more than 20 up to 30% in some services is increased dramatically. And of course, digital transformation is not the work of the Revenue Department as well, only the Revenue Department, but we try to think that if we're looking at taxpayer as the center of the service, we try to cooperate with the partner, or we try to use the idea of value co-creation to help because of, as you know, all the government agencies have the budget constraint, and sometimes we cannot provide the product that we want. Time to market is not very sufficient or very effective in that sense. We do many things. For example, we use the blockchain. We cooperate with the commercial bank to use the blockchain for the VAT refund for tourists. I would say this is the first scheme in the world that try to use the blockchain and reduce all the cost of the shop, the tourists, and also our department. We try to develop electronic stamp duty, where we turn it to physical one and to the electronic one with the Stock Exchange of Thailand. And we try to gather help from all startups that we have to the hackathon, but we turn it to a senior hackathon, and we call it Hackattack, how to develop the service of the tax department. And also thankfully to ADB to help develop the tax literacy website that provide the knowledge, and people can come and checking about their tax payment, whether they need to pay tax or not. And this is make them very easy and very friendly for the taxpayer to know about that. That's all we try to do during the COVID time. But what we try to looking forward after the COVID, we looking at the opportunity to get more revenue. We found that the e-commerce in Thailand is growing very fast. They're growing during the COVID. They're growing from like 1,600 something to 220,000 million baht a year. It's 35% increase. This is very important, and we got a new scheme or new business. For example, during the COVID, many activities, business activity has to stop. Of course, concert, but we found they have a virtual concert. They have a concert in other countries, in Korea, and they live into Thai or within Thailand as well. The virtual concerts become very popular among Thai people, and we try to cope with that. And we, revenue department, try to use this opportunity. Okay, the e-commerce is growing very fast, and of course, we use the international cooperation to TIWB, to BEPS, to Global Forum. TIWB, of course, help us to build capacity of the our tax officer, and especially Mr. Dr. Niti, our Director General is a part of member of the director of the governor, right? Member of the board of director of the TIWB, and BEPS, of course, Thai government decided to join with BEPS with the minimum 4 actions, and we looking at and studying about another other 2 action of BEPS as well, and global forums, especially the AEOI. We now on process of registration to combine or to ratify of the global forum commitment, which we will have the law coming up soon, very soon. Okay, I think that is all for the Thai Revenue Department to share our experience for this session. And I would like to turn the floor to Kun Ekapon. Thank you very much.
Thank you so much, Mr. Vinit. We have heard a lot of very interesting tax policy and administration issue from the 4 distinguished speakers. Now I would like to move on to the Q&A sessions. Just a house rule announcement. We have the platform called CrowdComs. I would like to invite all participants to put up the questions so that I can bring your questions to ask the panelists to respond. And while we are waiting for any questions to come in, I would like to exercise my position as the moderator to put up some of the questions as the starting point so that we can get the discussions rolling. The way I will do is that I will put up the questions and I will invite selected speaker to respond, and we can go a few rounds as the time allows. We hope to have the Q&A until 2:55, and then we will wrap up the sessions. Let me first start with the first round of the Q&A. Let me start with one of the heated debate in terms of the tax administration among the tax authorities in the region, which is the new normal after COVID-19 due to the lockdown measures, right? As many speakers has highlighted, the economy has been digitalized. People get used to digital transactions. There has been a significant increase in the online transaction and e-commerce, but the business model, especially among the tax authorities in the region, at least from the institutional framework point of view, is pretty much designed for the brick and mortar transaction. Like for example, the tax registration, right? You need the tax resident to be in that particular country in order to be registered and filing for the tax payment, but with the digital economy, the fiscal border has disappeared. Basically, the service providers in another country can easily do businesses with the resident in your country. I would like to hear from the country experience first, from Indonesia, Malaysia, and Thailand. What is the greatest obstacle for the tax authorities in your country to transform, at least from the organizational point of view, to fit into the digital economy. I know there has been a lot of issue, for example, the human capital. The tax authorities usually have a lot of economists, lawyers, but there hardly be any people with the data science. For example, the technology catch-up, digital transformation process has been gradual, but the digital economy has already been there. What is your immediate challenge? And then I would like to invite Andrew to close with the perspective from the development partners. What could international organizations like OECD, including ADB, of course, we have been working together a lot to support the DMC, do in order to facilitate that process? How we can be a catalyst in that process? Thank you. Maybe we can start with by alphabetical order again, Ibu Oka, and then Dr. Esther and Mr. Vinit, then Andrew.
Thank you, Paul, for the questions. Yeah, I think this is a hot issue that everyone is discussing about, and every country in this world is also paying their attentions to. Despite the drawback of this pandemic, the working from home and mobility restrictions, it has shown the importance of the digital systems. The trend increased we use the online meeting in doing our daily work, and the increased role of the online transactions is also more significant in supporting our daily lives and activities. And those make us realize that digital economy and its digitalization is getting more and more important. And thus, we know also that the digitalizations in the tax systems will also play more significant role to improve the tax system itself, overcoming the administrative burden, which would then be increasing the potentials of optimizing the tax revenue. In the context of the digital economy, the establishing of tax fairness has also been an important agenda in the Indonesian tax reforms to promote the fairness and also level playing field between the local and also the foreign business, and to support the tax revenue. Indonesia has introduced the VAT on import of services and also intangibles through the enactment of Law Number 2, the year 2020. And also it's implementing regulations effectively entering into effect on the 1st July in the year 2020. But in terms of the income taxations, of course, the Indonesian government is looking forward to the global consensus of income to level the playing field and create fairness, which is now being discussed under the TFDA task force in the OECD, with the help of the OECD under its BEPS action plan discussion. The biggest challenge when we're dealing with the economic, digital economy, taxations, probably goes to the adjustments of the tax system itself in coping with the need of the digital system. And then the second one is the data collections, because data collections, informations is really tools, powerful tools in performing the law enforcement in this regard. We know that digital transactions, they don't need the physical presence, and that's why very mobile, and the power of data is really crucial in this regards. Not to mention, of course, the cooperations with the players itself, and then also systems that would enable the cooperations between the governments and also the platforms. We are currently doing cooperations with the platforms to collect the VAT under the Law Number 2, 22, and its sub implementations procedures. And going forward, with the increase in the understandings of the economic or digital, we do hope the fairness on the taxations in this regards can be improved in the future. Thank you, Ekpol. I think that will be my response on this.
Thank you. Dr. Esther, please.
Yeah, thank you, Paul. We know that the COVID-19 has really enhanced the digital transactions. It's not just about working from home using facilities that is made available through digital means, but we have seen a lot of online businesses cropping up during this pandemic. And one of the ways that we are very concerned and also is trying to address is how do we collect all this information? How do we ensure that we are able to detect income that should be declared through online businesses? How do we bring informal sector to the formal sector? What sort of digital platform, what kind of cooperation we could get from digital platform? We are also looking into some discussions done at the moment about digital platforms being used as possible tax agent for tax administrations. So these are some of the issues that we are looking at. As I mentioned earlier, we are looking into e-invoicing as well as one of the ways in which we could capture all this information. And this is a big project for Malaysia. Actually, it's part of the government overall electronic blueprint, where we plan to get all the agencies connected, and we obtain all the information through the e-invoicing initiative. So for Malaysia, the Inland Revenue Board of Malaysia is engaging with the rest of the agencies as well to look into this digital transformation. And we hope with this initiative, we could capture all the information that we need to enhance voluntary compliance. So that's my contribution to this discussion.
Thank you, Dr. Esther. Vinit?
Yes, I think the most important obstruction that we face, I think, is about the how to do the capacity building on digital tax ecosystem. I would say this is the infrastructure of digital transformation is very important. For example, the registration that we have, we cannot force people to submit e-filing, but we still have to receive the paper tax return as well. That's the need, and also infrastructure of the other agency. When we want to share all the information together, we want to build data lake together. It's not very easy to connect to each other with kind of different technology that we have. And also infrastructure and budget. Of course, budget constraint is everywhere. Digital transformation is costly. And the last one is time to market. This is the issue that we have, but we try to fix this kind of issue with the value co-creation idea that we do the open API, use the blockchain to use the service to let the private sector come to us, and they can provide their service and plug in with the open API and send all the information to us. That's what we try to do to deal with all the budget constraint and time to market. And I think we quite successful with that, but it's a long way to go to finish that, I think. That's all from me right now.
Thank you. Let me conclude this last round with Andrew intervention, please.
Yes, thank you. And I have to, I guess, reiterate many of the things that that everybody else has mentioned. This is clearly a time of great transformation, on a lot of different levels, not just policy-wise, but kind of, infrastructure-wise, just the way people not only do business in the grand scheme, but also the way governments interact with, with the citizens, and that's had as big an impact in tax as it has in all the other spheres of daily life. I think just on the digital, when we talk about digital tax at the OECD, of course, it often revolves around our pillar 1, pillar 2, trying to reshape the fundamental international tax rules that have been in place for much of the last century, and we're certainly trying to do that because the way people do business has changed so much that the way tax treaties work today don't really have, they're not really dividing up the right to tax in a rational way, and so we're trying to address that, and the stakes are really quite high. We had hoped to do it last year to come up with a solution and a consensus. Okay, sorry, I seem to have gone away somewhere, and that's possible digitally. But the COVID pandemic has obviously had a big impact on our work, but and slowed down our search for a global solution on the digital tax issues. But it's also really underscored how important coming to an agreement is, because if we don't get agreement, then we'll get unilateral measures. Countries will act alone. A lot of countries have either already acted or they've planned things, they put things in place, and that will lead to retaliation. That will really lead to uncertainty, and that will all have a depressing impact on the economy. And that's the last thing in a post-COVID recovery world that the economy needs. So we hope to find a solution, but that all requires an international global institution. I think that's, the question from Akapol was, how can the IOs, the development partners help? And I think bringing people together and having the forum to come to an agreement for those things is really a vital role that we played. But digital is much more than just those pillar 1, pillar 2, and the international tax treaty rules. A lot of things that the people have said here, Mr. Vinit's, Director Vinit's comments about the advances in Thailand are really, really interesting. I think blockchain has a huge role to play in the future. The way that tax administrations interact with their taxpayers, and the way that taxation can be, hopefully, or compliance can be built into a tax system, I think is something that's really exciting, and something that in the Forum on Tax Administration at the OECD, we're working on in the context of Tax Administration 3.0, where we're seeing how technology can really take compliance and the whole tax experience to another level. And I think that's going to help, withstand shocks like the COVID pandemic a lot better in the future. And we're also working with developing countries to see how they can bring their, as Director Vinit mentions, the core tax system up to the level where they can take advantage of those things. And the last thing I wanted to say, and this is something that Dr. Koisin mentioned about informality and kind of bringing the everybody into the tax system. And I think also in Thailand, this is an issue. Across the region, we see a lot of informality. And the more informality you have, the harder it is to get compliance, to count numbers correctly, to really have predictability on your tax base, to make sure that everybody's taking advantage of the things that they can. A lot of things delivered through the tax system. If you've got people that are kind of outside the system, it's very hard. And I think improving or decreasing the levels of formality will be a huge win for a lot of economies. So I think there's a lot of work to do, and the IOs, ADB, OECD, World Bank, IMF, all the others that play a role. I think capacity building and providing the forum for those discussions is what we can hopefully bring. So with that, I turn it back to Akapol. Thank you.
Sure, thank you. Yeah, thank you so much for the very insightful views from all the speakers. We unfortunately run out of time, so we may have to bring this session to a close. As a final remark, first of all, I would like to thank the 4 distinguished speakers, Andrew, Ibu Oka, Dr. Esther, Mr. Vinit, for participating in this very important and timely sessions on tax policy for the economic recovery in the region. And on behalf of the co-organizer for this session, ADB and OECD, I would also like to thank the participants from ADB and OECD point, right? We are committed to continue to work with all the DMC to strengthen the capacity and also the readiness for the tax authorities in the region to cope with the emerging challenge in the tax administration. And as we heard from all the speakers, I think we reached almost the consensus that the issue of the digitalization and how to ensure the full tax compliance in the digital economy, how we can maximize the opportunity for the international tax cooperation platforms like BEPS, the Global Forum, and TIWB will offer the opportunity. And we have many participants from the countries which are seriously considering to be part of the international cooperation. And ADB and OECD, we will work together, especially under the regional hub announced by our president last year. This could be very good the platform to foster the regional cooperation in the tax policy and administration. Without further ado, I would like to bring this session to a close, and I would like to thank the organizer for the Southeast Asia Symposium Development for organizing this forum, giving us the opportunity to share the view and also the insightful takes on the taxation in the region. Thank you very much and have a nice day.